Hello and welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. To my left is Kartik Malhotra and Krishnakumar. Also joining us on the show is market expert Kush Bohra. I want to first begin with markets, Kartik. Markets opening in the red, down by as much as 200 points this morning. Sensex and Nifty down by approximately 160 points.
Absolutely, Shweta. Yeah, so markets have opened in the red and not a very rosy picture to paint early in the morning, especially after a slightly longish extended weekend, if I may, at least for me, because I wasn't here on Monday. But after
many weren't there in offices on Monday, Kartik. Many people were not there, but look at those.
This is what the market is looking like. Nifty 50 in the red, Sensex in the red, Nifty Bank also down. IT is picking up a little bit. I think IT comes on the back of Infosys, in the green this morning on the back of the deal it has struck with Liberty Global. And that has lifted the Nifty IT stock. Let's look at the stocks in action, and I think that will bring these numbers in perspective a little. So if you look at the stocks in action this morning, and this is as of 9:45 a.m., you've got, of course, news triggers on Infosys, which has taken the stock up. It's trading at about 1410 levels, about 15-20 minutes ago. This was the number. Apart from that, ITC continues to be in the green. Everything else, from Adani to IndiGo, Mahindra, Reliance, HDFC Bank, pulling down the markets this morning. Not a great start for a Wednesday morning.
Not a great start. Kush, explain this to us. What's happening here? Put this in perspective. Is it the global domestic cues, inflation up, or is it what's happening? And the domestic cues, of course, not in line with what was expected. Inflation at about 7.44% CPI in the month of July, way above the expectations. Is that what's pulling the markets down, or are there more global cues?
Hi, very good morning, guys. First up, let me just give you some hope and then dash it. Nifty is actually rebounded from 19,300 level. Now, if you see the Monday move, 19,250, where the 50 DMA lies, Nifty actually rebounded from that level. Now, while it might sound very rosy that we are up from the day's low, I still wouldn't rule out further downside on the Nifty. And if we break the 19,250 level, which is the 50-day moving average, I'm actually looking at 18,800, where any kind of major support lies for the market. You're right. The culmination of whatever is happening globally, plus the macro data that came in that wasn't as encouraging, is actually in just one figure, which is the FII selling. Now, if you see for the last month or so, they've been sellers on a continuous basis. That is actually not auguring well for the markets. So as long as that pressure remains, I don't see a very stark upside coming into the markets. However, for a stock picker, this is a a good time. If you're an investor from a medium term perspective also, this might turn out to be a buying opportunity, let's say 3, probably 6 months from now.
All right, let's quickly also touch upon stocks that are in focus. Let's quickly bring back that graphics on screen. Infosys, to begin with, as my colleague was pointing out, is going to be a stock in focus, Kartik, because of the deal that it's signed with Liberty. What does it really mean for Infosys?
It means a couple of things, Shweta. Number one, this is, I think, the first foray for Infosys when it comes to deployment of its AI tool. Now, this AI tool, of course, as we know, was launched about 10 days ago. It was announced when the results came out. And this tool now gets deployed for customer behavior, for customer analytics for Liberty Global. Now, Liberty Global is an entertainment company. From what I understood from the news, it is trying to build a stack. It is trying to build an operate model for Infosys, whereas Infosys is going to build the platform for Liberty Global to acquire new customers, to take its entertainment offering to customers in a new format. Maybe not very different from what we do at News9 Plus. It could be an OTT stack being built. And in addition to that, the AI tool gets deployed now to understand consumer behavior, to retarget customers. And this comes, of course, as a $1.5 billion deal. Now, for Infosys, this isn't the first big deal it has struck. There was a $1.9 billion deal that Infosys had struck with a British telecom player also recently. And overall, I think the message for the IT sector there is that discretionary spending from the West is beginning to loosen up a little. This was not a trend that we had seen in all of last year and about the last 18 months or so. IT spends from Western companies wanting Indian IT companies to build software for them had depleted significantly. And this was in the wake of US inflation. This was in the wake of the banking crisis in the US. So overall, the message now being that if not US, at least UK seems to be a prominent place for companies to start sending some contractual work back to Indian companies.
And Nifty pack, in fact, outperforming many of its peers and other indices. Kush, what's happening here with IT pack especially? You know, as I said, it's outperforming banking, it's outperforming, you know, consumption stocks. What's your view on IT pack?
I'm glad you bring this sector up because my view's been very constructive on this entire pack even before the results came in. Even in our advisory, we've mentioned that even after results, if you see a dip in the stock or all most of the stocks rather, it just might turn out to be a buying opportunity, and we are seeing precisely that play out in most of the sectors. Infosys, a case in point where the low for the stock was made on the day of the results, somewhere close to about 1185 odd levels, and from there the stock's actually rebounding, gaining from strength to strength. It's on the verge of crossing over its near term resistance zones, which is about 1430 odd levels. Once that happens, I won't be surprised to see 1600 kind of levels on Infosys. Now, one interesting theme that is playing out here is that we've always followed the Nasdaq. If the Nasdaq's down, you will see the tech pack not performing so well. In fact, just we practically replicate Nasdaq day by day. But if you see the last week or so, where Nasdaq's actually topped out, largely given the lack of enthusiasm in the chip making stocks and other big tech stocks, Nasdaq's actually going down while the Indian IT stocks are actually going up. We've always maintained, that the kind of businesses that, the Nasdaq sort of encompasses and the Indian IT stocks have are very different. There is no rhyme or reason to link them except for the fact that they fall under the broader gamut of, IT stocks. So for me, IT stocks from here remain a buy. We are very optimistic on a few names, Infosys being one of them, HCL Tech, being the other one from the large cap space. From the mid cap space, we like, Persistent. So these are some of the stocks that are, on our radar. Any kind of dip, and, we turn buyers on, these stocks.
All right, so IT remains on the radar. Another story that's on the radar is that of Interglobe Aviation, the parent company for IndiGo. Gangwals, the family, the promoters are selling their stake.
The
It's a
promoters,
block
in
deal.
fact, at IndiGo, at Interglobe Aviation, held as much as about 57% of the company, and this for the largest airline operating in India right now. There are technically just two, but yeah, even if you were to spread that to, let's say, a SpiceJet or a, Avasa, what is that? Akasa. It still extends to about 4 players, but Interglobe Aviation being the largest airline and the largest stakeholders still being the families of the promoters. So 57% was held by the promoters and about 29% actually was held by the Gangwal family, is still held by the Gangwal family, which we are now told are in talks to sell about 3,700 crore rupees worth of shares, diluting their stakeholding in the company, perhaps on a bid of, of course, the airline is at the peak right now, so there is great valuation that can be derived by selling your stake. Secondly, I think more professional retail level shareholding is something that could help the airline continue its operations unabated. But interesting story there, because the stock markets do not seem to have taken that news
Not
of
very kindly.
Gangwal's, diluting
their
their
stake.
stake very well. And the stock this morning was down almost 1% or so. So
Right.
let's understand from Kush. Kush, what is the horizon on Interglobe Aviation? Where does it go from here?
The outlook's not so bad, and I'll give you a couple of reasons. Let me play the devil's advocate. The aviation sector is globally, historically not known to be a money making machine for investors, right? I mean, if you take a handful of names globally, Southwest and Etihad, some of these which are actually state owned, there haven't been too many cases where the entire sector has made a lot of money for investors. Now IndiGo stands as an exception to that rule. Ever since its IPO, the stock's actually done well. We know the kind of performance that the company has on ground as well, so that just translating into stock performance is not actually that much of a surprise. For me, the kind of news that has come out and the kind of dip that we are seeing, in the grand scheme of things, this will just be a buying opportunity. The stock's been in a bit of a pressure. We know that crude prices have also jumped up, if you see, in the last a couple of weeks time, supply concerns and other factors included. That's why the stock's in pressure. This news again not doing too much for the stock. But for me, as I said, in the grand scheme of things, this dip rather will actually be a buying opportunity. I will accumulate the stock from 2400 to 2450 kind of zones. My near term targets on this are 2600 and 2750, where the stock made a recent high. So yeah, I mean, given the kind of setup and the moves that we've seen over the last few months and years, for me this remains a buy. And these kind of dips are actually quite encouraging if I'm an investor.
All right, and moving away slightly to another stock in action, that is the ITC, reported good numbers as some would say. Kush, what is your overall view on the consumption stocks, including ITC? ITC not in line with many other FMCG players and their revenues for that matter.
Yeah, but I think the major impact that the stocks seeing is due to the demerger story, right? I'm sure the investors will take the numbers in their stride, but it's the demerger story that's actually not playing out too well. That's something that's the bone of contention in the entire ITC story at the moment. Now that said, I will still stick my neck out
Kush,
and say that ITC.
If I may ask you to elaborate on that, you are saying the demerger story is not playing very well, and we can see that. In the equity market, we can see the performance of ITC stock took a beating immediately after that demerger story came to light. Explain to us why. What exactly are investors fearing?
I think the idea was that the ratio will probably be a little more favorable. The valuation for the hotel industry, the hotel business will probably be a little more favorable. That's not something that's come in line with the expectations. Now that said, if you see the stocks fallen sharply from there, for me what's happened is that this dip is actually a buying opportunity. So as I was suggesting, that the entire FMCG space is in a bit of a pressure right now. If you look at the likes of Britannia, if you look at the likes of HUL, these stocks aren't doing well, and with little hope of reviving from here on. So while the dip has come due to more corporate reasons rather than the stock performance itself, for me ITC will stand out as an exception. I will look at buying opportunities. The stock is taking support near its near-term averages, which come around 440 odd zones. And if you see, that's the way that's the level where the stock has rebounded. So I will actually look for buying opportunities in ITC, but not FMCG pack as a whole. For me, the likes of Britannia, HUL will still remain a short trade, while ITC remains a buy on dips, and these are precisely the kind of dips that you look for in a stock when you're looking at an entry point.